Hey everybody, Smart Silver Stacker here. Hope you're doing well. Got a great show for you today. A lot to cover. Got some big moves in the price of gold and silver today. Both metals look like they are on the verge of a major breakout. We also got some shocking debt data from the Treasury. The most recent data from them really just mind-boggling. The levels of debts and deficits are becoming truly insane. Going to go over all of that in today's live stream. Let's start off here with the chart of gold. So you can see we've got a flag formation here, gold coming up to this top trend line. This is a consolidation formation, a continuation in gold's run up that it has been on lately, hitting new all-time record highs. Yes, we're going to talk about oil as well. See, Knicks fan 1992 is watching the energy market. I am too. Do me a favor, if you're in the chat, leave a comment, leave a question, leave anything. Help fire up the algorithm for this one because it's going to be exciting. We want other people to get this information as well. And if you are tuning in, a big thank you. Zooming out on the gold chart, we can also see that there's this huge cup and handle formation. We've talked about this many times, but I mean, if you really assess the technical situation for gold, couldn't look much better. You've got this big multi-decade or, decade-plus cup and handle formation, a very bullish formation. Here's the handle. We just broke out of that, right? And I mean, there's nothing to indicate that this uptrend is done. In fact, just by looking at this formation here, the breakout from here should take us over 3,000. We know that because the bottom of the cup is down around 1,050. The top, the breakout level, over 2,000. You take the difference, you apply it to the point of the breakout. That's just basic technical analysis with this formation. So we should be heading much higher here shortly. In silver, too, I mean, we're really coming up right against the top of this bull flag that we've been watching for several days forming here. And, there's something very critical that I want to point out here. I got to draw one more triangle. But this chart down here, this is the gold to silver ratio chart. And something important just happened there. So let me get another triangle up here for you just to give you an idea of why this may be it for the breakout from this bull flag. So if you look at the previous two flags in this breakout, something that correlated to the breakout from this bull flag here back in April was a sharp breakdown in the gold to silver ratio. There was a consolidation pattern here. When it broke down, boom, up to the next level. Same thing here. We had a consolidation in the gold to silver ratio. When it broke down from that, that was right around the same time that silver ran up to over the $30 level. And we got the same thing here. We got a convergence pattern here, a consolidation in the gold to silver ratio. It just broke down from that, and here we are on the cusp of breaking out of this bull flag pattern. Now, there is also the possibility that we retrace and go lower here. I will say that today I just closed out the leveraged silver position that I mentioned to you back on June 13th. Initiated that under 29 bucks. Looked like we were going to bounce off this trend line. We did. Not trying to get greedy, so I closed that out for about a 90% gain. None of this is financial advice, of course. It's sharing with you what I am doing. We could retrace here lower, but either way, I think it's a great entry point to be getting your hands on some physical metal. You don't have to stare at charts and worry about it. Once you have it in your stack, it's in there. SD Bullion's got a sale on these $50. I think that these are one of the best forms of physical bullion to be stacking at the moment. You remember what happened in March of 2023 to silver bullion premiums. They skyrocketed, and $50 were one of the most difficult forms of bullion to get your hand on at that time. Hello to Yankee Stacking in the chat there, and to all of you who are joining in at the moment. Do me a favor, if you're in the live stream, smash that like button because we've got some important news that we're about to cover. So one of the catalysts for today's move in the price of gold and silver seems to be this news that the Swiss central bank has once again cut. They have decided to cut rates, and they were one of the first Western banks to begin rate cutting recently, and now they have continued that with another, surprise rate cut is how they're describing this. That might be why it's having sort of a disproportionate effect on the price of gold and silver. But it's important to note that, the Fed hasn't begun cutting rates yet, and yet these other foreign central banks have, and that's actually rather bullish for the dollar. So you've got the dollar index today actually in the green. Very interesting that you've got gold and silver rising while the US dollar index is also in the green. So think about this. When the Fed actually begins cutting, and they're going to cut, we'll talk about why in just a moment. I mean, they're going to have to cut a lot. They're going to have to cut way more than anybody in the mainstream is telling you. Gold and silver are going to move like crazy because the US dollar index is going to start heading lower. If gold and silver, I mean, silver's up 4% today. That's with the US dollar index in the green. So think about what will happen when the dollar starts to break down. And if you want to know why, it's because the debts and deficits are exploding. We covered recently that the latest Treasury statement tells us that in May, the government was running a $347 billion deficit. Now, that's a lot. I mentioned that that might be a bit of an outlier, but I mean, maybe not, because the most recent data from the debt to the penny Treasury website, I mean, it's absolutely mind-boggling. So we're just going to do a little math here. I'll pull the calculator up, and you notice that the 17th of June, that's the most recent data we have, the data is recorded here, the debt level, $34.75 trillion. And then on June 14th, which was the previous day's data in terms of, business days, 34.68 trillion. So if we just do a little bit of math here, it gives you an idea of how insane the debt levels are really becoming. And so we're just going to subtract one day from the other. And, if you do the math and you realize that this rate could go on for a while, I mean, it truly becomes mind-boggling. In one day, the U.S. national debt grew by $69 billion plus. Okay, think about that. $69 billion in one day. If you annualize that, now look, again, that might be a bit of an outlier day, but if you annualize that, that comes out to a deficit of $25 trillion. I'm not saying the deficit's going to get that high, but still, it's a sobering reminder of how problematic the levels of debts and deficits are becoming in this economy. And this is why the Federal Reserve will have to cut rates much, much lower. I mean, the interest on the national debt is already over $1 trillion. So, there's no way that that is a sustainable path that we're on, considering the fact that spending hasn't been cut, deficits are exploding to just unfathomable levels. $69 billion in one day. It took over 200 years to get the first $1 trillion in debt, folks. And now we're racking up $69 billion a day. So, I mean, have no doubt that the Federal Reserve is going to be cutting. They're going to have to, because that's the only way they're going to be going to be able to enable this level of profligate deficit spending in Washington. Now, let's change gears a little bit and get into the geopolitical, because there are some very critical developments on that front as well. We've got Russia and North Korea now signing a mutual support pact. Now, AP News here reporting that it is not known exactly what this pact entails, but according to North Korean state media, so I mean, obviously take that with a grain of salt, but they say that the pact requires both countries to use all available means to provide immediate military assistance in the event of war. So consider what the implications of this may be when NATO goes to war with Russia in Ukraine, which is right around the corner. It means that this is not going to be an isolated regional conflict. This is going to be a global World War III. I mean, that is obviously what we are heading towards. It seems like it couldn't be any clearer to me, and it's really ratcheting up in the past just couple of days. You had North Korean border guards crossing the demilitarized zone into South Korea, so much so that South Korean forces were forced to fire warning shots. Now, the South Koreans say that they believe that these soldiers accidentally crossed because they were fortifying the border. So that's the important thing to note, is they're out there laying new landmines, putting up new anti-tank barriers. Why are they doing that? It's because conflict is right around the corner. And it's not just in North and South Korea, of course. We're seeing escalations all over the globe. And in the South China Sea, we're seeing a significant escalation in conflict between the Philippine Navy and the Chinese. You can see that this is a conflict that they got into. This is a video from the Wall Street Journal where Chinese sailors in these inflatable boats are wielding knives, spears, and hatchets, ramming. You can see there he just punctured a boat with his knife. They're ramming Philippine boats which are supplying bases in the region. According to this report, a Philippine soldier actually lost a thumb, of all things, in this ramming event. I guess he was holding onto the side of the boat or something there. But, I mean, we're in an alliance with the Philippines. We are bound to come to their aid if they get into a war. So, I mean, you hear all about Taiwan. Taiwan is the big catalyst. Well, I mean, the Philippines and China have been coming into some serious conflict in the South China Sea over these disputed islands. And if that turns into a shooting war, well, we're at war with China automatically. And I mean, Taiwan will likely, then come to the forefront, because if China's in war with the U.S., they're going to take advantage of that and likely, pull the trigger on Taiwan as well. So, I mean, we really are on the verge of a major conflict. And if you think that $69 billion is a lot to go into debt in one day, wait until World War III kicks off, folks. The level of debt and spending and the amount of money creation that will follow any global conflict is, it's going to, people's heads are going to spin around when this occurs, if it occurs. Hopefully it doesn't, but it seems to be the trajectory that we are on. And so you got to get prepared. Don't count on paper assets. Don't count on devaluing fiat currencies in that kind of a scenario. You're going to see a huge rush into physical metals if a conflict like this breaks out, and rightfully so, because they're going to be one of the few assets that can actually protect you from the scourge of inflation. I mean, war is one of the most inflationary, destructive enterprises a state can embark on, and that is right where we're headed. In further signs that it is not going to be limited to one theater, we've got the Middle East now. Israel and Lebanon are on the verge of a major war. Israel is drawing up plans to invade Lebanon. So Hezbollah published drone footage of several sites in northern Israel, including this Haifa Bay. There are military targets, there's ships here. So clearly, Israeli air defense, much touted, can't stop this aerial reconnaissance of areas in their north from these Lebanon drones. And in response to this, what's being called an open threat, Israel says it's ready for all-out war in Lebanon. That's according to this report from Al Jazeera from yesterday. The claims from Israel's foreign minister and military late on Tuesday followed Hezbollah's release of threatening drone footage that they have plans approved for an offensive targeting Hezbollah. Now, that is going to likely lead to an all-out war with Iran. Talking about this for months, ever since October 7th, that is the real threat. Hamas is, small potatoes compared to the Iranian-backed Hezbollah militias operating out of Lebanon. When that conflict kicks off, expect Iran to get drawn in a real way, not like last time, where they launched, a bunch of outdated drones and crappy missiles in a show of force that they knew would be intercepted. No, I mean, it could be much, much worse than that. And that is likely why we are seeing the price of crude oil continue to climb up to $81.89. Look, if the Middle East kicks off, Iran gets drawn in, they're going to shut down the Strait of Hormuz. You're going to see crude oil spike to triple digits minimum. Possibly $150, $200 oil would be in the books in a very short period of time once that strait is closed. The Strait of Hormuz, of course, adjacent to Iran, that's where about 20% of crude oil, that's 20% of the globe's production of crude oil flows on a daily basis. You can imagine the impact that will have on the global economy, and one effect will be that commodities will spike. Now, look, I mean, people might see this and think it's doom and gloom. Hopefully none of this plays out, right? I mean, having a big silver stack and a big gold stack, yeah, you're going to be better off than the rest of folks, but still, probably would have preferred that none of this, took place from, a future perspective. But you can, wish in one hand and, well, the rest. Look, nobody's hoping that any of this stuff plays out this way, but the elites, the folks in charge, they seem to be steering us in this direction. So, to me, you want to get prepared. You want to get your hands on some hard assets before that takes place. I think crude oil is going to be moving much higher. I'm not giving anybody financial advice, but businesses that extract energy from the ground in geopolitically safe locations are probably going to do pretty well. Anyway, let me know what you think in the comments down below. Keep an eye on the price of gold and silver, because it's possible that we break down, retest this line here before we get a major breakout, but it's also possible, given the backdrop of what's occurring around the world in terms of conflict, massive debt monetization that's around the corner, central banks already beginning to cut rates. It's very possible that this might just be the first stage of a major breakout. And when we do break out of this bull flag here, I would expect that silver is going to be heading 35 and higher. We're going to be hitting new all-time highs in silver. I am fairly confident in that, given how bullish the situation is from the technicals and the fundamentals. But again, let me know what you think in the comments down below. Do me a favor, smash the like button, subscribe to the channel if you have not done that yet, and I will catch you next time. Stay